A worldwide pioneer in biotechnology, with a well-diversified medicine portfolio and a pipeline full of future drugs and clinical trials, with a solid balance sheet and a 3% dividend yield. Grab a cup of coffee and join me and my pop for the second video in the pharmaceutical series. And today we're going to dive into AMGN. Stick till the end to find which company will be next, and you can find a link in the description below to the previous chapter on Vertex. Let's go! As always, this is not a financial advice. You should not listen to YouTubers. We're going to cover everything about the company and do some valuations. AMGN is a leading biotechnology company and a pioneer in the science of using living cells to make biologic medicines. Their main drugs are Enbrel for treating rheumatoid arthritis, Proloria for osteoporosis, Jeva for helping patients with multiple myeloma, and Neulasta to reduce chance of infection due to low white blood cells in people with certain types of cancer. As you can see, Enbrel is their main seller. It is patent protected until 2028, and unlike some other competitors, they don't rely heavily on one bestseller drug, and they are well diversified. They also expand by strategic acquisitions such as Otezla, which completes their inflammation treatment solutions and already accounted for 10% of Q4 2020 revenue. They bought Astellas Pharmaceuticals in Japan, which operates as a subsidiary, and they have a 20% stake in AMGEN, which specializes in oncology and enables them to operate in China. AMGN invests $4 billion each year in research and development. They have 150 ongoing clinical trials, 15 drugs in phase 3 clinical trials, and they improve constantly their production process. They also donate each year $1.5 billion worth of medicines to uninsured and underinsured patients in the United States, which gives them a big like. Revenue growth looks good. In 2019, they crossed successfully some patent expirations and returned to growth in 2020 despite COVID effects. Same thing applies for their cash flow. To summarize the business, their portfolio is well diversified and their main seller, Enbrel, is patent protected until 2028. With good acquisitions that expand their operating areas and increase their revenue, a full pipeline of drugs in development, and the surrounding conditions of growing and aging world population that will need more medical care, their business and growth look very solid. The only serious risk is changes in drug pricing policy in the United States under the new Democrat regime. This is why we'll give the business a check mark and move to the balance sheet. With a total of $15.1 billion in cash and receivables and 11.6 short-term liabilities, their current ratio is 1.81, and they have no problem to cover the short-term liabilities. The long-term debt is $33 billion, covered 32% by their operating cash flow, which is good, and the debt interest payments are covered 9 times by EBIT, meaning they don't have any problem to serve their debt. So balance sheet get a check mark. Let's move to the valuations. Just a short reminder to subscribe to the channel if you like the content so far. We're going to look at a dividend discount model, a future growth model, and a discounted cash flow model. Starting with the dividend model, we can see they're growing their dividend constantly and the latest rates are about 10%. I don't think they can keep this rate forever, so I used the multi-stage dividend growth model. I gave them 8% for the upcoming 5 years, then 3%, and then my required rate of return of 7.5%. Putting in the current or the expected dividend yield for 2021, we come up with a fair value of almost $186. Moving to the price to earning valuation, we can see they're growing their earning per share, except of 2020, in which they suffered a little bit from the COVID situation. We can see the average price to earning is 21.1 and the median is 18.5. We'll take everything into the model with a growth rate of the earning per share of 4% in the first 3 years, then 3%, then 2.5. Required rate of return is 7.5. We'll put analyst estimations for earning per share here in the model. And as a safety margin, I will use expected PE of 16 instead of the median of 18.5. All of this gives us a fair value of $194. Let's proceed to the discounted cash flow model. I use free cash flows to revenue to determine future cash flow based on revenue. In 2020, this number was a little bit higher than average, but I use the average. This is why 2021 cash flow is less than 2020. We take everything into the model, put the future cash flow based on analyst estimations for revenue over here, required rate of return in 7.5, and I assume they will be able to grow the cash flow 2% beyond 2024. Divide everything by number of shares outstanding, and we come up with a value of almost $300. Current price when recording this video at Saturday, March 27 is $250, which is some sort of average of all the models. Well, the valuations left us in doubt, so when in doubt, go and look what our insiders are doing. So we're joining marketbit.com and we see that insiders are selling the stock for the past few months, and they're all selling between $230 to $240, so probably they think this is a good price to take some profits. Let's check the charts for more insights. The long-term trend for AMGN price stock is an uptrend, which is good. Lately it's trading sideways. If we check the price action, we can see and put on our indicators, we can see it trading between 260 to 210. If you're a swing trader, try to ride these waves. If you're a value trader, you shouldn't be looking at charts. And if you're a bargain hunter, try and see if the stock price breaks down below the 210 and allows us to buy the stock in a serious discount. So the chart left us undecisive. Let's move to conclusion. First and most important, if you like the content, please subscribe to the channel. AMGN is an excellent business with a long-term growth and a stable dividend. When to buy is a question left to your own judgment and risk appetite. I am looking for higher dividend yields, so I'll be waiting for the stock price to drop to about 200. As always, don't listen to YouTubers and join me and my puppy for the next episode in the pharmaceutical series about Johnson & Johnson. Until next time, ciao!